Good morning, options traders, and happy Monday, everyone. I hope everyone had a great weekend. And good question to kick off the week. Traders have been asking, what are level 2 quotes? And sometimes your broker's platform will show these as level 2, or another term is called market depth. And you'll see why they call it market depth in a little bit. But level 2 quotes are important, and especially if you're placing large orders at market. So you want to make sure you understand what level 2 quotes are. So what are these things? Why do they matter, and how do you use them? Well, first of all, understand that the markets, it's an auction market. And that's whether we're talking about options, shares of stock, bonds, it doesn't matter. They are all an auction market. So you can think of it like a fancier form of eBay. So remember that buyers place bids and sellers place offers. And in the markets, we have what is called a limit order driven market. So this is what's really building our liquidity, is everybody who's out there placing limit orders. And then you'll find out in a moment where the market orders come in. So to understand how books get formed, let's take a look at a very simple example from the beginning. And let's assume that maybe we're looking at the Chicago Board Options Exchange, and this is for a particular option. So maybe it's for the August 50 ABC calls. So every single market would be for a specific contract. So we've got bids on one side, we have offers on the other, and if it's the first time this option has been trading, then this is what you're going to see. It's a blank slate. And if the auction has been going on for a while, then it just continues day after day. But again, to understand where it comes from, let's assume we've got this blank slate. Somebody comes in with an order to buy 5 contracts for a limit of 5. So remember that a limit order means that this person's order cannot get filled for anything above 5. Yes, can get filled for less, just not more. That's what it means to be a limit order. So remember that buyers place bids. He's going to get stacked up over here under the bids. So he'll show up as a price of 5 for a total of 5 contracts. That's what that number is in the parentheses there. Another trade comes in to buy 2 contracts at $4.90. So in the financial markets, we're always concerned, or at least mostly concerned, with who's willing to bid the most and sell for the least. So this person right now is another buyer. He's going to get stacked up under the bids, but notice his price at $4.90 is less than this order right here at 5. So yes, he's going to get stacked into the books. He has to, but he's going to get stacked below because his price at $4.90 isn't quite as good as the buyer at 5. Let's say another trade comes in to sell 7 contracts at $5.50. So the limit of $5.50 means that for a seller, you cannot get less than $5.50. You can get filled at $5.50 or higher, but by placing it at a limit of $5.50, you cannot get anything less. So remember that sellers place asking prices or offers. So he's going to go to this side of the book. He's a seller. It's going to show up as a price of $5.50 at 7. Another order comes in, let's say to sell 5 at $5.55. So this order is a higher price. We would still say it's a stronger selling price, but in the financial markets, we want to see weaker sellers, people with lower asking prices. So yes, he does get stacked over here, but he's going to go on top because his offer here isn't as good as a person at $5.50. So he's going to show up as a limit of $5.55 for 5 contracts. Now let's say a new order comes in, another trader to buy 7 at $4.95. $4.95 is stronger than $4.90, but it's not as good as 5. So he's going to get wedged between these 2 orders. Right there, it's going to show $4.95 for 7. Another trade comes in, sell 10 at $5.60. He's going to go to the top of the stack. He is the highest selling order, at least so far. Another trade comes in to buy 4 contracts at $5.10. Now this order is the highest bid, at least so far, so he gets to jump to the front of the line. So again, the markets are more concerned with who's willing to bid the most and who's willing to sell for the least. And that's why they're starting to take place towards the center of the screen here. So he's going to show as an order to buy 5.10 limit for a total of 4. Another trade comes in to sell 6 at $5.45. This trade is the weakest seller, but remember, for the markets, that's better. We want to see lower selling prices. So he gets to come to the front of the line. So he's going to show up right here towards the center of the screen, 545 for 8 contracts. So this process just continues. And of course, it can get very long, very quick. And it's all done by computer, but I just slowed it down so that hopefully you see how it's being formed. There's another thing called time priority. And what this means is that if 2 or more trades come in with the same prices, then they get sorted by time. Let's say that another trade comes in to buy 6 at 510. Notice we've already got a bidder at 510. So what happens though is because he came in at a later time, he gets stacked up behind this order. So even though I'm not showing it right here, there would be timestamps beside these to show the actual time that they arrived. So even though they both are bidding 510, because they came in at different times, the person who had the order there first gets the high position. So once you see how this takes place, you now can understand what's called the inside quote. So when you log onto your broker's platform, what you're looking at when you see, let's say, a bid of 510 and an asking price of 545 are the highest bid and the lowest offers. That's what you're looking at. And you will also see what's called the size. And the size is always reported as a pair of numbers. The first number here corresponds to the bid, and the second number corresponds to the asking price. So what this is telling you is that yes, we have a high bid of 510, but there's only 10 contracts available. And they're coming from 4 from this trader and 6 from this trader. If these were shares of stock, this would really be 1,000 shares. It means 10 round lots of 100. But for the options market, it means actual contracts. Over here, the size of 8 is all coming from one trader, this person right here at 545. So again, this is what's called the inside market or level 1 quotes. So this is what most people are looking at when they're placing their trades. So what are level 2 quotes? Well, level 2 quotes are everything outside of this. It's all of these trades and it's all of these trades. And again, these lists can get very big. They could go way up here off the screen or way down here below the screen. But those are level 2. It's everything other than your highest bid and your lowest offer. So why are these important? Why might you want to look at level 2? Well, let's say that you place an order to buy 22 contracts at market. And before you place this order, you're going, I wonder if I'm going to get any surprise fills. Something I wouldn't want. What could you do? Look at level 2. So what this tells you is that you can get 8 of your trades at 545, but if a market maker doesn't step in and you're allowed to what's called walk the book, you're just going to walk right up here along these orders. You might get 8 at 545. You might get 7 at 550. That's a total of 15. You might get 5 at 555, and then you could get the remaining 2 up here at 560. So you would receive what's called a multiple fill. And it's going to show that you got 8 contracts at 545, 7 at 550, 5 at 555, and 2 at 560. The trader who had this sell order at 560 will automatically have his order adjusted by the broker. It's going to show that he received a partial fill for 2 out of his 10 contracts at 560, and now has an open order to sell 8. And again, that will happen automatically. But if you're looking at this and going, I wonder if I'm going to get prices up here at 560, maybe I should place a limit order. And that's where level 2 can help you. Now, in the real world, what would happen? Well, probably you would get 8 at 545 and a market maker would step in on the other 14, and you'd probably get all 22 at 545. But it's not guaranteed. So if you're trying to find out what might happen, this is where you want to look at level 2 quotes. Let's take a look at the sell side. Let's say you put an order, or at least thinking of one, to put 12 contracts at market. Well, you'd have to get matched with a buyer over here. What could happen? Well, if you're looking at level 2, you could say I can get 4 contracts at 510. I can get 6 contracts for a total of 10, also at 510. But I might get 2 at 5. So if you're willing to take this little 10-cent hit on 5 contracts, you might say, you know what, that's not a big risk. I'm willing to go at market. But if you're not, level 2 can show you what could possibly happen. So that's your level 2 quotes, and hopefully now it makes more sense why it's also called market depth. It just shows you how deep the market is with buyers and sellers. So now you have a new tool to use if you're thinking of placing market orders for fairly large orders. Take a look at level 2 quotes and you won't be hit with any unwanted surprises. For anyone who'd like to learn more about the art and science of options trading, please check out the Alpha Trader course and strategy lab at optionsatoz.com. Also, please join us on the Facebook trading group Options A to Z, and you can find a link in the description below.